With more than 6,000 small and micro-cap companies listed, if you're looking for the next Apple at the earliest stage, then ChannelChek truly is the orchard. The listed companies support ChannelChek, so it's free for you, the potential investor, to gain access to institutional quality research from FINRA licensed analysts, advanced market data, industry reports, news, and a growing catalog of videos and webcasts. Make sure to subscribe to our YouTube channel and register for ChannelChek so you're always up to date on what's going on at the small and microcap data place. Welcome to the C-Suite series presented by ChannelChek and Noble Capital Markets. Noble is an SEC-registered, FINRA-licensed broker-dealer and the source of the equity research available on ChannelChek. Today's presentation features CEO Edward Atsinger, EVP and CFO Evan Masyr, President of Broadcast Media Dave Santrella, and President of New Media David Evans of Salem Media Group, NASDAQ ticker symbol SALM. Following a corporate presentation, they're joined by Noble Senior Research Analyst Michael Kupinski for a Q&A session. Visit channelchek.com or click the link in the description for Noble's research on Salem Media Group, as well as news and advanced market data. And now, here's Edward, Evan, Dave, and David.
Well, thanks to Noble for the opportunity to present the Salem story. Salem is one of America's leading multimedia companies that specialize in focusing on audiences that are interested in Christian and conservative themed and family themed content. We date back to 1974, and we launched our first Christian Teach Talk station and have since expanded to news talk, Christian music, and a variety of other formats. In the late 90s, when the digital revolution really began to unfold, we began to move aggressively in that area and have expanded our digital footprint pretty significantly. The company is overseen by two division presidents. Dave Santrella oversees our broadcast division, and David Evans oversees our digital and publishing division. And I want to give you a few overview comments, and then I'm going to turn it over to Dave Santrella to talk about our broadcasting segment, and then Dave Santrella will turn it over to David Evans to discuss our digital and publishing segment. We have about 101 radio stations, primarily in large cities. Half the population of the U.S. lives in the top 25 markets, so we focused on where the people were, and we're in most of the top 25 markets. We offer Christian Teach Talk programming that is block programming focused. We also offer contemporary Christian music, and we have a number of news talk stations. We have a network, Salem Radio Network, and we have about 3,100 affiliates that take content from us every day. We also have a very robust digital footprint, both on the Christian side and on the conservative public policy side. If you take a look at our revenue, you'll see that the revenue is divided in a pretty diverse way. Digital media, as you see, 16.5%, broadcast digital 29.4%, programming 70.1 million, 28%, advertising 84.8 million, 34.2%, publishing 9.2%, 22.9 million. So it's a diverse footprint. Our stations are in 36 markets. As I said, about 3,100 affiliates take our network content. Dave will kind of take you into the details of both the radio broadcast part, the radio owned and operated stations, and also our network programming. So Dave, let me turn it over to you to discuss those segments.
Thanks, Ed, very much. Yeah, Salem has three core formats. Ed mentioned that before. Salem does well because, quite frankly, we stick to our knitting. We do well with this genre, people that are interested in Christian, family-themed programming, and conservative politics. So we have 38 radio stations plus Sirius XM, Family Talk Channel 131 in the Christian teaching and talk format. I think one of the most interesting things about that format is that we have about a 98% renewal rate with the clients that are on that. These are large national ministries that have been with our radio stations, quite frankly. Some of them, they're still in the original contract that Atsinger sold them like 45 years ago, and they're still with us today. And the only thing that's changed in that time is the rate. So 38 radio stations plus Sirius XM in Teach and Talk, 12 radio stations that are in the Christian contemporary music format. Our full market FM Christian contemporary music station in Dallas, KLTY, is frequently a top 5 radio station in the market, has been the #1 radio station in the market, both 6+ and Women 25-54, in a number of Nielsen rating books in the past couple of years. The Fish in Atlanta, very similarly, generally a top 5 Women 25-54 radio station. It does exceptionally well in all 12 CCM radio stations in that format. And we have 31 radio stations in our conservative news talk format. And that's had really a growing appeal in the last several years. And let me take you through the network right now. We have 7 network hosts that are part of the Salem Media Network. Hugh Hewitt starts the day out in mornings for us. Hugh generally is broadcasting from Washington, D.C., followed by Mike Gallagher and then Dennis Prager. We just added Charlie Kirk, and what's unique about Charlie is we actually have Charlie Kirk in the same day part that we have Dennis Prager. And so that's, kind of interesting. Why would we compete? Well, here's the reality. We knew when Rush Limbaugh was, in ill health that at some point stations may be having to make a decision as to what to do if Rush Limbaugh was no longer on the air. And we thought it would be a good idea to be able to offer a secondary choice. And Charlie Kirk was gaining in popularity through his formation of Turning Point USA, which is an outreach to college campuses. And so we added Charlie. Charlie's done tremendously well. We already have 370 affiliates for Charlie Kirk. And then following Charlie and Dennis are Sebastian Gorka, Larry Elder, whose name is probably more popular now than it's ever been. He just recently ran for governor in the recall election, and then Eric Metaxas. Eric is mostly on our Teach and Talk radio stations. We offer top of the hour news through SRN News and Town Hall News. So SRN News is on most of our Christian Teach and Talk radio stations. It's also picked up by the Moody Bible Institute and their network of stations and other Christian radio stations throughout the country. And then we have Town Hall News, which is really more for other political conservative radio stations in the market. So it's on all of Salem's teaching news talk radio stations, but it's also on other news talk stations across the country. In fact, 848 affiliates carry Town Hall News. About 1,600 carry SRN News. And then we have the Salem Music Network, which is our today's Christian music, our Christian contemporary music format. And that's on 194 affiliates. Our network revenue continues to do exceptionally well. In the last 12 months through June of 21, almost $21 million in revenue from our network. And with that, let me go and talk about one other part of broadcast, which is our digital revenue. So, of course, Salem has expanded significantly on the broadcast side to offer more digital products and services. And so kind of a mother of invention that came out of COVID was the Salem Podcast Network and Salem Now. So the Salem Podcast Network is a variety of hosts, including Charlie Kirk, Dinesh D'Souza, Dennis Prager, Trish Reagan. Some of them are hosts that are on our radio station's network, our network already. Others have nothing to do with Salem outside of the fact that they do a podcast. But we launched the podcast network in November of 2020. Currently, we have an average of 340,000 episode downloads for all podcasts on the Salem Podcast Network. That's 340,000 episode downloads. Charlie Kirk alone gets about 130,000 downloads per podcast. And we've monetized that since we've launched that. We've been in the black since day one with the Salem Podcast Network. Out of COVID, we birthed Salem Now, which is a TVOD, a transactional video on demand streaming platform where individuals can come to the platform. They can download the app on their iOS or Android device or on their Roku or TV or Apple Fire Stick or Amazon Fire Stick or Apple TV. They can launch the app, and from it they can buy movies that oftentimes don't have a home elsewhere on television. They may not be picked up by Netflix or Amazon Prime. A few good examples would be Dennis Prager's No Safe Spaces. That was picked up by Salem when it was turned down by Netflix, and that generated almost $1 million of revenue. Probably our most successful movie to date was Larry Elder's Uncle Tom. We launched that on June 19th of 2020 on Salem Now and generated almost $3 million in revenue with that movie. We also have Salem Surround, and Salem Surround is really an initiative with our local radio stations, and that's our ability to offer digital advertising to our advertisers and our block programmers that spans across our radio stations and is not limited to the audiences that listen to our radio station. So we're able to offer pay-per-click campaigns as well as owned and operated digital advertising on our assets. But in addition to that, a host of other digital marketing strategies. If they want to reach an audience that looks like our audience but doesn't listen to our product, we can reach them through Salem Surround. And that's been tremendously successful. We launched that in 2018, and that's continues to generate 60+% growth in revenue every year for us. And with that, I will turn it to David.
Thank you, David. So just taking one step back, one thing that's unique and perhaps a little unusual about Salem is we have two digital business units. We have Dave Santrella, who's running digital broadcast, and those digital assets all directly leverage our radio platform. And then we have kind of the second digital media business unit, which is more kind of pure play digital, built, kind of digital from the ground up without leveraging the radio platform in the same way. So within the national pure play digital media, we have 4 distinct business units. The first is our Christian websites and apps. We've been in that business for about 20 years. So very established business. We typically will generate 50 million or so visits to our websites and apps every month. So a very substantial business. In 2006, we added on conservative websites. That's been an area that's grown very nicely over the last few years, and we're now up to about 45 million visits a month across our conservative digital platform. So again, very substantial. Those businesses are both principally advertising supported. We do sell some premium subscriptions, but the revenue is mainly advertising. The 2 other businesses are both e-commerce businesses, a church e-commerce business where we sell a variety of multimedia resources to churches, and then a financial newsletter business where we sell subscriptions to a variety of personal finance, retirement, and investing newsletters to a pretty large subscriber base of about 20,000 people. In terms of kind of the size of each of these businesses, the Christian websites are about 40% of this digital of the $40 million of revenue, so about 40% of that revenue and also about 40% of the profit. Conservative websites, rather smaller, about 20% of the revenue, about 10% of the profit. Church e-commerce, about 20% of the revenue, about 40% of the profit. And the financial newsletters, again, about 20% of the revenue and about 10% of the profit. So the revenue pretty evenly divided, the profit much more driven on the Christian side of things. With that, let me hand you back to Evan. Oh, sorry, book publishing. Forgot about book publishing. So book publishing is a business we added on more recently. There are two components: a traditional book publishing business called Regnery Publishing, which has 3 imprints: a conservative imprint called Regnery, a Christian imprint called Salem Books, and a history imprint called Regnery History. And then the other component of our book publishing business is our self-publishing business called Salem Author Services, which again has 2 imprints: Toulon Press, the Christian imprint, and Mill City, the general market imprint. In total, this publishing business in the last 12 months generated about $23 million in revenue. I would point out that we recently sold our final magazine. So we've now exited the magazine business, and this is now purely a book publishing business. With that, Evan.
Thanks, David. So let me kind of conclude our prepared remarks with some highlights now that 2020 is behind us and 2021 is proving to be a much better year for us financially. There's some things that I think are worth mentioning to everyone here. First of all, our leverage is in a considerable better position. If we rewind the clock to the second quarter of 2020, our leverage was 8.96. I mean, very, very high. And obviously, a lot of folks in our space were experiencing similar, if not much higher, leverage ratios with declines in revenue and EBITDA. Pleased to report a year later, that leverage is now 6.06, but because we've accumulated a fair amount of cash, it's really 5.23. And when you factor out the netting of the cash, we had some Paycheck Protection Program money that in July, $11.2 million of that was forgiven, basically everything that we applied for. And we sold some land in just outside Dallas, Texas in July also for $12.1 million. When you factor those into the June 30th number, our leverage is actually below 5 at 4.91. So we're pleased with the progress that we're making. We're not exactly where we want to be, but we're certainly pleased, much better than a leverage approaching 9. More recently, earlier this month, we exchanged 52% of our 2024 6.75% bonds for bonds that have a slightly higher coupon at 7 1/8, but they don't mature till 2028. So we feel very good with that exchange. We feel that we have adequate flexibility and liquidity to take out the remaining 48% of those bonds between cash on hand, an untapped revolver. We also, as part of this exchange, have a delayed draw backstop that we could draw more 2028 loans up to $50 million. Plus, by the way, cash that we'll generate from operations. But even before we get into cash flow from operations for the next 2.5, 3 years, we feel we have adequate liquidity and flexibility to take out those 2024 bonds. So really takes refinancing risk off the table. Additionally, revenue and EBITDA in 2021 are starting to approach 2019. I mean, to say we're beating 2020 isn't saying much, where 2020 was a pretty depressed year, but every month we seem to be getting closer and closer to our 2019 levels. And it's worth noting that digital revenue, which is the combination of David Evans' National Digital Division and Dave Santrella's Broadcast Digital Division, that revenue increased 22% on a year-to-date basis, and it's now 28.2% of our total revenue comes from some digital source. And the last thing I'll leave you with is we feel there are some pretty compelling valuation metrics based on the closing price as of yesterday. Free cash flow yield is just under 18%, and our EBITDA multiple is 8.4. And we believe EBITDA will continue to improve as we get further away from this pandemic. So with that, that concludes what we had prepared, and we'd love to answer any questions that you have, Mike.
All right, thanks, Evan. And let's go ahead and get started with the questions. Ed, a number of media companies have recently rebranded and have highlighted their diversification efforts. And I will quickly add that you're one of the most diverse among your peer set. Town Square Media introduced itself as a digital-first media company. Recently, on an interview like this last week, Cumulus Media introduced itself as an audio-first company. And even some traditional radio companies have moved outside of the media industry, like Urban One, and is developing casinos. how does Salem Media view itself?
Well, I don't think we necessarily subscribe to either one of those tags. I point out that we started our digital activity in 1999 when we acquired our first digital assets, and we've been building those ever since. Mainly that was at David Evans' division. It was a separate division. It was kind of standalone digital that was complementary to the audience that we were targeting. Dave Santrella has really, with his broadcast division, has really taken the lead, and David was really the author of Salem Surround, which is our digital advertising agency. And it was a collaborative effort to launch Salem Now and the podcast network, but that primarily came out of the broadcast division. So I would almost throw the question to David Santrella. David, how would you view? We haven't thought in either of those categories, Mike, but Dave Santrella, how would you characterize it?
Yeah, I would characterize Salem as a customer first company. So, others are audio first, others are digital first. I really like to think of Salem as customer first. And because of the wide array of marketing strategies and distribution vehicles that we have now, quite frankly, Michael, that we didn't have a few years ago, we really can make that claim and be true about it. And that's that. First off, our customer is a lot of different people, right? It's a ministry partner, it's a block programmer, it's a listener, or it's a business owner who wants to advertise with us. And the great news is those people are buying a variety of marketing assets right now. And they always have been, except in the past, we had very few things to offer them. If I'm selling radio and they don't want to buy radio, I didn't have anything else to talk to them about. But now I have the ability to offer them a variety of other marketing assets, whether it's over-the-top television that we're looking to buy, email marketing, social media marketing, pay-per-click campaigns. And so really, it's allowed us to become a customer-first company. We can find out what the needs of our customers are, what's keeping them up at night, and then come up with a great diagnosis for a plan of a strategy that will work for them and execute that and literally have a full array of marketing tools available to us to accomplish that goal for them.
Yeah, I might just add a footnote there. Of course, we've always, since 1999, had digital products that we could sell. And Dave Santrella is referring to the expanding them on the radio side where they're more radio related, as David Evans pointed out. But, we've kept up with the industry. I mean, look, he might not like me to point it out, but Dave Santrella right now is the joint board president of the National Association of Broadcasters. That's joint board chairman, which chairs both the radio side and the TV side. And he served 2 terms as the radio board chair. So we've always been plugged into what's going on in the industry. And I served on the board for 6 years. It's allowed us to stay right in the trends and to get the access to the latest information. So we feel that we've got a really good handle on it.
And I'd like to turn next to the company's debt. Historically, the company has been able to manage a higher amount of debt. And I appreciate Evan walking us through how debt has been reduced over the last couple of quarters. Historically, the company had debt leverage that was much higher than the industry average. And I think that was based on the consistency and predictability of a large portion of your business. Can you talk a little bit about how the business provided you the ability to manage through your debt in the face of the COVID crisis last year? And where would you like to see debt levels going forward?
Yeah, I'll start with that, and then if anyone wants to add, that's fine. As far as kind of how it got us through, the height of the pandemic. Look, when it hit, we were getting, just like everyone else, a lot of cancellations on the broadcast side, and we had a large interest payment due in June. And out of an abundance of caution, we reached out to these block programmers who are really our partners. They're our ministry partners as much as they are a customer. And we reached out to some of our largest ministries and shared with them the predicament. And they gave us an advance on their airtime from May through December, and they all paid it in May to the tune of north of $8 million. Sure, we gave them a small discount, but they look at us and realize, they need us as much as we need them. As a matter of fact, a couple of ministries said, "When's your next interest payment due? Because if you need help, we're here to help." Fortunately, we didn't need it in December, and quite honestly, if you rewind the clock, we really didn't need it. We did better through the pandemic than we were at first worried about, but we wanted to make sure that we had adequate liquidity through the height of the pandemic. But now that we're out of it, things are obviously much better. I'd share with you that leverage is in a much better place. But ultimately, the answer to the second part of your question, Mike, is we'd like to see leverage really start with something in the threes. We'd like to get under that 4. We're glad that pro forma we're under 5, but we'd really like to see that leverage get under 4. I think that's at a point where we'd feel much more comfortable. In spite of the fact that we do have that block program and giving us a lot of stability, we still would like to see leverage and debt be reduced.
Another note or two, Mike, to that question. The fact that we refied our debt in 2017 and had a 6 3/4 coupon bond, 7-year bond that was covenant light, that helped us tremendously, where some of our counterparts that had bank loans, term loan B, they suddenly had to go back and renegotiate and pay penalties to get an amendment. So having that vehicle helped us. And then also, Evan mentioned, out of abundance of caution, we went to our ministry partners and said, well, we want to be sure that we have enough liquidity to meet our current commitments. It turned out we didn't need it. The only reason we even thought about it is because in the latter part of 2019, just before the COVID crisis, we had used a lot of our liquidity to take down debt. We bought we were able to take out a number of bonds on the open market below par, and we used some of our revolver to do that. And so suddenly we said, well, we use this money. It was prudent at the time. It was like, okay, you can take out debt at 95 cents on the dollar, 93 cents on the dollar. Why not? And we did. We used a lot of our cash reserves and even some of our revolver. And then suddenly COVID hits, and it was unexpected. And so we were able to go to our partners that we've worked with, some of them for 40 plus years, and they were only too happy to help us. So yeah, we're unique. I think the block programming, the fact that it's so resilient, if a program's been on a station for 35, 40 years and they built up it's like an annuity. They built up this solid following, and they know that if they were to cancel, they're not going to get that time back. And you don't give up a time that you've been sitting on for 45 years. You've built up this huge following. Now, if you're a Chevy dealer, it might be a different matter. Might say, I can't sell anything right now. I'm going to take a hiatus for 6 months. The block programmers never do that. So that stability of that revenue model, along with the covenant light, fortunate financing we had in place, all of that helped us to manage it quite well.
And one other thing on the block programming, which you're not going to see a lot of companies be able to say their top 10 customers have been with them on an average of 32 years. So to me, that also underscores the relationship with the ministries.
And just to clarify, for our viewers, block programming represents about 28-30% of your total company revenues, right?
Correct. It's just under 30% of total revenue.
And Evan, in your presentation, you talked about the company recently refinanced a large portion of its debt, which was coming up in 2024, which means that you probably would have had to refinance beginning in 2023. This was a real significant event. And I'm concentrating my questions initially on your debt because investors, I think, had a lot of concerns about the company's debt. And I think this refinance should assuage their concern about that debt. It was a very significant event given that it puts the company on a path towards significant debt reduction. It extended the maturities for a large portion of that debt, and with very modest interest rate increases. Looks like a great deal to me. Can you talk about how the refi opportunity came about and why you think that this is a significant event for the company?
Yeah, well, it really started with a conversation with our largest bondholder, who had 52% of the outstanding notes. And we started talking about ways that we could work together, that we could take advantage of where the market is, lower interest rates, and do exactly what you're talking about. Take some of that refinancing risk off the table. And through the negotiations of all the different deal points, including interest rate and other things, one of the subjects that we spent a fair amount of time on is this concept of a delayed draw backstop. So I have the ability to draw some additional 2028 bonds, up to $50 million is the number we arrived at, that I could use to take out the 2024 notes. Now why 50 million? If you take 50 million plus the cash we had on hand at June, which was about 20 million, the land sale in Dallas of 12. So now you're talking, kind of low 30s in cash plus the 50 that gets you into the 80s. And then I have an untapped revolver. So even before I start generating cash flow from the date of this refinancing, I already have enough liquidity and available cash to be able to take out the bondholder. So I think this absolutely takes the 2024 refinance risk off the table. And that's why it was really attractive to us with just a small increase of coupon from 6.75 to 7 1/8. We just felt that was a great opportunity for us and good for us in the long term.
But let me just add a footnote to that. First of all of our bondholders are in a better place today because of that transaction. I mean, it takes refinance risk off the table, to take interest rate increases off the table, and with the trends on inflation, look, we feel better about that every day. And all of our debt holders all of our bondholders, our revolver, I think all should feel much better about the deal we've done. We pushed our debt out until June of 2028. We have ample cash to retire it timely and probably on a expedited basis if we need to. So no, we feel very good about it. And you have to look at what's happening with all the scary projections about inflation. We feel better about it every day.
Like I said, I think it's a great deal. David, I would like to turn to you again. Some of the key growth drivers for the company has been Salem Now, Salem Surround, and Salem's podcasting networks. Can you give us a little bit more color on the key growth drivers for the company? Maybe talk a little bit about the revenue growth opportunity that you see from these businesses. And do you see the company developing into more content creation going forward, and how significant that could be?
Yeah, Michael, I'll start with that. I absolutely do see us moving into more content creation. In fact, we already are. I mean, so we're always looking for new talent. The benefit of the podcast network is that it provides us with the opportunity to have kind of an endless pool of talent. Prior to that, when we ran out of network time, we don't have need for another personality, but now we have the opportunity to bring on all sorts of new personalities. So we're creating a lot of new content by adding new hosts to the platform. Todd Starnes, Trish Reagan are just a couple of examples of new prominent hosts that have that we've brought on board that are already making good money for us. Trish, I have a number here. Trish Reagan already has a 55,000 average downloads per episode. So that's very monetizable at that number. And so we'll continue to do that. But beyond that, you can count on Salem starting to take the content that we have and repurposing it. So taking pieces of content that we have and repurposing that into smaller segments, kind of snack size audio or snack size video that will be available on the podcast network and other platforms, all of which will be visible to the programmatic buying desk like Simplify and Central. But more important than that, we sell it locally. We're very, very good at selling our content with our own sales staff, which provides a much higher CPM and generates significantly more dollars. So on the podcast network, that's what you can count on. With regards to Salem Surround, that just continues to grow for us. We're expanding the digital product offerings that we have there. At the same time, we're reducing the amount of downtime that our salespeople have. When you write a digital order, it's a little complicated. It kind of puts the salesperson back on the desk with their head down for a little bit. We're trying to eliminate as much of that as we can so that we can get them back out on the street. We're doing that by hiring and building a bigger infrastructure, behind them, a support team behind them. And I think that's what helps you see that kind of continued fueling growth there. That again is about 60% year over year, and we anticipate that will grow similarly for another couple of years in that regard.
And David, you recently mentioned earlier in the presentation that one of your syndicated radio talk show hosts, Larry Elder, was launched into prominence during the California recall election. And I believe now that he's lost that recall, he will be returning to a show. So can you talk a little bit about his rise to celebrity and the national recognition that maybe it has helped you in some way, possibly through affiliate growth or advertising and sponsorships?
Yeah, really, I think a couple benefits came out of it. First off, it provided us with the opportunity to give a platform to another new talent, Carl Jackson, who's got a great story and a great testimony. A guy who grew up in Compton, was at age 11, his mother died. I think she was murdered. And just a great testimony of a kid that came out of complete poverty as a small business owner in Florida, and now is doing a network radio show on a fill-in basis, and is incredibly well-spoken, incredibly intelligent, black conservative. And so we're excited that we have him now. And I would anticipate that we'll keep some sort of a relationship with Carl, even after Larry returns. Larry's on about a 30-day leave. The election really tired him out. And we saw how hard he worked during it, so we wanted to accommodate him with his leave. And so he'll be back, towards the end of October with us. But there's no doubt it's risen his popularity and his fame. And we think ultimately that will be good for us, because it will probably increase the number of people that are anxious to have him on their radio station, increase our affiliate numbers.
David Evans, I hope you're not getting too comfortable over there. I'm going to turn next to you. I have a couple of questions. The company has historically complained about Facebook, its anti-competitive behavior, and how Facebook has diminished traffic to your sites. All had an impact on advertising, I believe. Recently, there has been a push for more privacy, and Apple has now been asking customers to opt in to be tracked. And this has had a negative impact on Facebook data, particularly conversion data. To what degree has the Facebook issues had on your business? And do you think that these privacy issues have kind of leveled the playing field for your businesses? And maybe David Santrella has some thoughts on the radio spot business as well.
I think it's still too early to really know what the implications are of these privacy changes, but you're quite correct. Over the last 2 or 3 years, our traffic from Facebook has declined, our traffic from Google has declined, and that's been a challenge for us. And we've learned we can't be reliant upon Facebook and Google, or over-reliant on Facebook and Google for traffic and revenue. We need our own proprietary traffic sources. So we're doing a lot of work developing our email list so that we can communicate directly to our website visitors. We're also doing a lot of work on push notifications, both desktop and mobile push notifications, which again gives us direct access to our viewers, to our visitors. That reduces reliance on Facebook and Google. And we've certainly heard from advertisers that the performance they've seen from Facebook in recent months hasn't been as good, because Facebook isn't able to target, particularly on a mobile device, which is 90% of their traffic. Their targeting isn't as good as it was 6 months ago. So as advertisers evaluate the various different ways that they could do their digital marketing, if a competitor's getting worse results, that can only help us. So there are some positive signs there, but really too soon to tell kind of the magnitude of that.
Yeah, on the broadcast side, Michael, we're seeing some, but really not as much as you might think. The great news is that we have personalities that are well known and have strong followers on Facebook, and so and I'm so sorry. And so as long as we kind of stick to using our own social media, on the platform, on Facebook as example, we're able to be very successful and still use Facebook effectively. But again, we're not relying on Facebook to drive traffic. We're not, and we have so many tools available to our advertisers that we're just able to find other opportunities for them and other strategies. And it's why even this month, in the heart of kind of the drama of Facebook, we've seen month over month growth with Salem Surrounds.
Great. So obviously next year will be a pretty good year for you. Political advertising, you should get a nice little boost. You'll maybe get a boost from your conservative books, which tend to do well in election years. David, can you talk a little bit about the titles that are coming, how many titles, and how might this compare to previous biennial election years?
It's still a little early to have the full schedule locked down, but we always do better in even-numbered years because of political. The midterm year is never as good as the presidential year. So yes, we're looking forward to 2022, but it's not going to be, in all probability, as good as 2024. We do have some good titles coming up. We're pretty sure we've got a title from David Limbaugh. That should be good. We may well have 2 Christian titles or 2 faith titles from our radio host, Dennis Prager, which will drive the Salem book side of things. So at this point in time, 2022 is lining up pretty well, but we haven't finished the job.
It sounds like you'll have a pretty good year next year. I cannot stress enough how I like the deal you just did on the refi. I think it is a great opportunity for you. It should assuage concerns over the debt at the company. And with that, thank you, gentlemen. I would encourage you to take a look at my research on Salem Media. The stock symbol again is SALM, which can be found on channelchek.com.
Thank you for joining us for this C-Suite interview presentation brought to you by ChannelChek. Visit our YouTube channel for more interview content, as well as virtual roadshows and conference presentation replays. New content is added regularly, so subscribe below to stay up to date. Visit channelchek.com or click the link in the description to access equity research, news, and advanced market data on this and the 6,000 other small and micro-cap companies listed.